If you're new to financial markets and you want to know when is the best time to buy and when is the best time to sell, then I'm sure you've heard of the terms support and resistance. In this video, I'm going to show you how to find the most effective support and resistance zones to make sure you're finding the best probable trades. If you're new to the channel and you're wondering who's this guy speaking, my name is Matt Jimenez. I'm an entrepreneur. For the last 6 years, I've been able to work with the greatest financial minds on the planet. I'm here to pour into you guys everything that they poured into me. Now, without further ado, let's get right to it. Almost everybody in the world that uses technical analysis reverts to these main key points, and these are the key points that I'm going to drive home today. It's kind of like Bruce Lee. He's like, don't fear the man that practices 1,000 punches, but fear the man that practiced one punch 1,000 times. So when it comes to technical analysis, you want to practice the basics, and the basics start with support and resistance. And in this video, I want to show you exactly how to find the best probable setups on support and resistance and how to actually locate where this support and resistance may be found. If you don't know what support and resistance is, let's start with support. Support is merely just an area where buyers congregate, meaning more than likely if we get to this area of the chart, we're going to experience buying pressure. Think of it like a trampoline. If an asset price is above a support level, more often than not, as it comes down and reaches the support level, it will find buyers to inject capital that will push this asset higher. That's the thesis behind support. Now, resistance is going to be the complete opposite of support. Think of it as a ceiling where it can't go past. So as an asset price is rising, it'll reach a resistance level where sellers will be congregating. When addressing asset prices on a chart and you want to become a buyer, what are you going to do? That's right, you're going to look for support, as you want to find an area where other buyers will be. Now let's flip the script. Let's say you're looking at a chart and you want to become a seller. You're going to be looking for resistance levels to become a seller because you have more people betting with you that the asset price will be going down, therefore pushing asset prices down. All assets are a playground of buyers and sellers. Now let's jump to the charts and I'm going to show you exactly how I find my support and resistance levels, which have served me for the last 8 years dabbling in financial markets. Now I have the gold chart pulled up for everybody and I want to show you exactly how I find my support and resistance levels. Since this chart is screaming resistance at me, I'm going to go ahead and address resistance levels first. Let me go ahead and grab this line and I'm going to plot it right here. I plotted it at 2031. One thing that I want to address is this goes for both support and resistance. Support or resistance is never an exact price point, but rather it is a zone. What I like to do is grab the rectangles and plot them around my key points of interest, which this is a resistance key point of interest for me. That's why I have this line here, which you guys watch me plot, and this rectangle is to highlight. In this area, I know there's going to be sellers. Now, how do I know that? How can I assure myself that there is sellers in this area? Well, let's just look at the price action. This was the first attempt as it came up and got rejected and came down. So let's go ahead and just put a little circle here just to highlight for you guys. And then let me grab the circle again. As we came down and we approached this exact zone again, what happened? We got rejected and came right back down. Let me go ahead and plot this here. So this is 3 touches. Once you have 2 touches, that is more than enough evidence that we have a zone that can possibly be our key point of selling. Over here again, we have the 3rd key point of interest. Now, one other thing that I'd like to highlight in this exact setup is the kangaroo tail formations. So this candlestick here is a kangaroo tail. This one here is a kangaroo tail. And both of those are bearish kangaroo tails, meaning we're looking to sell. So not only are we in a resistance area where we want to be a seller, we actually have the perfect selling signal that we are going to come down in price. So you have the kangaroo tail here, right on resistance zone, which screams a sell, which it shortly did right after. And if you don't know what I'm talking about when I'm referring to kangaroo tail, just check out my last video, which I addressed the most profitable candlestick formations. So this is a resistance level. Now notice how I drew this zone on a monthly time frame. Reason being is because I always like using higher time frames for technical analysis. One, it always has more merit to its zones, meaning it's respected more often. And 2, it allows me to know the bigger move. Rather than tracking a 30-minute chart, which is very intraday, I like to know the overall consensus of where we're possibly heading. And when we're looking at monthly charts and weekly charts and we're finding our key points of interest, the lower time frames will often signal a opportunity for us to find our entry into a position based off of the monthly bias. So in this monthly bias, if we had a short position here or a short position here, I would have dropped down from the monthly down to a weekly to see where I can get a better entry. So here we have another kangaroo tail on the weekly, and here is our setup. What I like to do on the kangaroo tails, if you haven't watched the video, like I said earlier, just go ahead and watch the last video I made. So entry would be right around there, stop loss above highs, and we always have to go for at least a 2R, which means we're looking to gain 2 times more than we are willing to risk. And I like to go based off of structure. So if you guys don't know what structure is, let me just go ahead and grab this rectangle for you guys. And I'm just going to draw. Structure is all of this. So this area where you see price getting choppy, then again, if I just move it over, it gets choppy again right in that area of structure. Move it over again, slightly below. That is structure. So I like to use structure as data points for me to know where we can experience volatility and or where our targets could be, where we may be headed, where I could put a take profit or a stop loss. So in this case, I like to put the stop loss always above the highs, out of the zone. That way it's hard to stop me out. And then I like to look left, always looking at structure, always looking at where price could trade down to. All of this here, this is really choppy structure. So if you look at this choppy structure, then you just plop right over, you can see you got choppy, then again right there, again right here. But it's always going to tend to act the same in that same price region. That's how I find my resistance levels. Let me do another chart just to give you guys some more examples. I'm just going to click a random chart. We got GBP USD. So I'd like to start on the monthly. And what I'll do is I'll just plot a few. Here is resistance. Now we're going to get into something here. The moment resistance is broken and or the moment support is broken, it is often found to be its opposite. In this case, I want to show you something. So if we come back here, I'm actually showing you how to draw support right now by doing this. So this area where it came down and bounced really hard, that's the first indication that we have a support region. Then this second bounce, that is 100% validation that we have a key point of interest where support may be. So I'll go ahead and put my zone as such. This is support. Support is always when price is above like resistance. Resistance is always when the price is below a level. So this right here, this is resistance level. And I'll just go ahead and put a rectangle around here. So I always like to look at it as remember, a zone, never an exact price point. Now back to the support. So right now I just identified a support level. Keep in mind how I said the moment support is broken, it becomes resistance. As you can see, price came down right here and it bounced, but it wasn't able to make it very far. And what happened was it came down and tested it again and it broke the level. As it broke the level, it came down and it came back up into that zone. And that zone then became resistance. So when support is broken, it becomes resistance. When resistance is broken, it becomes support. As you can see, the break happened right here. And then it retested right here and it retested right here, showing that it is a valid resistance level. And I just think it's really coincidental how I pulled GBP USD up, and it's a picture perfect example of support being broken turning into resistance. Now on the flip side of everything, back to resistance really quick. Let's say that price did something impossible, but anyways, it comes up to our region and it gets rejected and it comes back up and it breaks it. This level now becomes support as it's coming down. Remember, support is only valid when price is above the level coming down upon it. Resistance is the exact opposite of that. Price will be coming from below. And this will then act as a support level for us. I'm glad you like my Picasso drawings. Very talented. When you find these levels, the whole purpose of it is to be able to find your position, right? You want to become a seller or a buyer in these regions. Now, let me show you exactly how I would have played these exact zones to find my entry. So I would draw the zones on the monthly, like I said, and I would drop down to a weekly. The reason why I always drop down is because when you drop down, it makes price movements not as large because we're zoomed in, right? When things are zoomed in, we're not covering as much price, meaning you could get a much tighter entry. So that way your position is what they like to call sniped. So right here on the weekly chart, I have a little kangaroo tail right on resistance, which is a strong sell signal for my strategy that I use, which worked out quite perfectly. But normally I don't ever enter on weekly because it's still too high of a time frame for me. Like I said, I only like the higher time frames when I'm using them to find a very valid zone and know the overall consensus. So actually this right here would have been a pretty good setup, but that's for another video. Once we're in our zone, we're going to be looking for, in this case, selling. Oh, perfect. This is perfect. Right here, we have another kangaroo tail, which if you haven't seen my last video, go ahead and check it out. It is by far the most profitable candlestick formation that I have ever experienced. And mind you guys, I've spent tens of thousands of dollars on my education, on understanding financial markets, and just becoming financially literate. So right here is a perfect selling point, which ironically, the level that I put earlier, this blue line, would have been my entry point. I'm going to highlight something to show you guys the power of dropping down to smaller time frames just to get a bit more of an accurate entry. So this is 1.40774. So that would have been the entry. Now let's go back to the monthly and see what screamed to us a sell. This is where the sell signal targeted right here on Monday, the 1st, February 2021. Right here, we had a strong selling signal. We have a moving average touch, which price came from below. So that moving average would act as resistance. But not only that, like I said earlier, this zone is support, which was broken that turned to resistance. So as we came up and retested it, I would have been looking for a short, showing that this is a key point of interest. And boom, our short would have happened on Monday. And we would have gotten the entry up here on this blue line versus trying to find an entry on a higher time frame where we'd miss out on tons of pips. So just being able to drop down and find your entry makes you that much more of a profitable trader. I'm going to go ahead and do one more chart. In this chart, I will do the support. All right, so I've identified a support region. Go ahead, grabbing the horizontal line. So right here's a nice support level. We have strong move here, strong move again. So I'm going to get ahead and plot that. And I'm going to grab the rectangle to make sure I'm highlighting this zone rather than just a exact price point. And when I'm doing this, I like to always make sure the zones are including a lot of the wicks, because the wicks are where the capital actually got injected, hence the wick, right? So when price is trading somewhere and it gets rejected really hard and the candle moves, it leaves the wick behind. So that wick is a trail letting us know, all right, here is an exact area where people injected X amount of money to make the market do X. That's why I do the zones as well, because it gives me more of a buffer room and a probability that I can find a setup rather than an exact line. So now I have identified the support level. Let's say we wanted to find a long position. We identified it back here, and as price comes and trades again on it, we want to be a buyer. This whole time we've been waiting to become a buyer. Like I said, support is an area where you want to be a buyer. So all I'm doing right now is looking on my support line to see if I have any potential candle formations or setups that indicate, all right, now's my chance to buy. None that I see at the moment, but I will say this setup right here, this is resistance in action right now. So you have this rise in price and a heavy move to the downside, which let us know, all right, this is a key point to watch. And as we came back up into this region, we have a formation that looks like price may get rejected. So let me show you an example of exactly what I mean. So here's the wick. I'm going to grab the top of that down to the body of the candle and pull this over. So now I know this is my zone. This is my area where I can find a selling point, and we potentially have a little setup here. Doesn't look too strong. As you can see, there's not much of movement going on, but nonetheless, this is just an example. So we have a hard swing and we're coming back up into this region, and we want to be a seller because the probability of this becoming another move to the downside is pretty likely. And like I said, we always like to gain 2 times more than we're willing to lose. So that's about a 2R right there. And I look at structure, which, like I said, will always indicate where price can struggle when it gets into this area. So right around here, as you can see, there's some action. So that makes sense that if price was to go down right over here. Typically, when we have a move really strong away from moving averages, we will tend to pull all the way back down into the moving average range. If price was to go down, it could potentially be more than a 2R. back to the support levels really quick to see if we can find an entry. I just wanted to show you a pretty live example because this is current data. This is to the exact date when I'm filming this, meaning if it works, then this resistance zone that we drew out together is very valid. I haven't seen any setups on the weekly on support level, but let's go ahead and drop down even further to the daily. Typically the lowest I go is the 4 hour. No price action that is showing me that I want to be a buyer. Potentially this here, potentially, but we're not so deep into the zone. It's not that pretty of a setup. Reason being it's not that pretty of a setup is because this support is a little bit lower, 1, and 2, be taking a long position straight into the moving averages. And like I said, when price is below a key point of interest, it'll act as resistance. So if we took a long position here, we'd be going long into some type of resistance, which hence, as soon as we got to the moving averages over here, price did struggle. So here's a pretty good one. This candlestick right here is a little kangaroo tail. Not the prettiest, but one nonetheless. We are pretty much in the midst of the moving averages rather than shorting right into it like the one I showed you before. So this one's pretty nice. I like the setup. It'd be a nice long position right here with the price above the entry. And then I'll look left to find where some structure is. And this key point of interest right around here has a lot of attention for me. As you can see, 1, 2, 3, 4 touches, breaks below. Now it's resistance. So now I know this area is where I would probably set my targets. Basically looking left. Remember guys, anything to the right, I'm pretending as if it did not happen. So boom, that would have been a nice little setup here. The only problem is to get a 2R, we'd have to have a little bit more. There you go. That'd be a 2R. I'd typically always have the stop loss beyond the high or low of the wick. So in this case, it would be beyond the low. But this zone that I drew down here, remember, was based off of a monthly chart. So technically, this would have been an amazing long position. As you could see, all the way up to where this resistance level is, which, would be great if we can know these things in advance, but this is the best way to actually find your way in advance. Now, that's how I use support and resistance. So I always start on the higher time frames, and then I drop down to lower time frames to look for candle formations on my zones to let me know that now is the opportunity to get in with either the buyers if I'm on support or get in with the sellers if I'm on resistance. All right, so now that I've showed you guys exactly how I utilize support and resistance, let me just summarize it all. We start with support and resistance scouting, meaning we're looking on higher time frames, starting from the monthly, dropping down to the weekly and or daily. So we set the zones in the monthly, and then we go down to lower time frames to find the most precise entry point for the trades that we're looking for. Support, we're looking to be a buyer. Resistance, we're looking to be a seller. Now, there's many different forms of support and resistance, whether that's from a trend line, moving average, Fibonacci retracement, and or extension, and all these things that we use to find zones, like I mentioned earlier, are all potential ways that you can be a profitable trader. But remember, always try to keep it as simple as possible. Just grab your zones and make sure that you're keeping an eye on them, whether it's a support or resistance, and you don't need all these flashy indicators and all these different things going on in your chart. I'm telling you, the power of support and resistance has been utilized for years, and it's extremely effective if used right. Over the last year, I've been a lot less hands-on, but that does not mean I haven't been effective in financial markets. I've actually been utilizing software to trade for me, and it's been the most exciting thing because it takes very minimal human labor, probably 5 minutes of my time. And this is my own experience, just checking it, making sure everything's firing on all cylinders, and it's been extremely profitable. In fact, ever since I've started posting this on Instagram, I've been getting tons of DMs, and all of them are saying how much they love this software for the people utilizing it. So not only are they loving it, but so am I. And if you're curious which one I'm using, the link is down below. That's all I got for you today. If you enjoyed it, please leave a like, comment, or subscribe, and I'll see you on the next one. Peace.